There is an African proverb, ladies and gentlemen, that says that when the time has arrived, the people will gather. And once the people have gathered, the time has arrived. I'm thrilled to be welcoming you this afternoon to Igugu Global's webinar, Sustainable Transitions, Africa, the Policy and Adaptations session. We have today a fantastic panel that links together the whole of SADC and the world. Ruan Bestabe joins us from Windhoek, Namibia, representing Bank Windhoek. Olumide Lala joins us from London, representing the Climate Bonds Initiative. And Angelique Popono joins us from Victoria, Seychelles, representing SECAT, the Seychelles Climate Conservation and Adaptation Trust. Welcome all. So I'd just like to open the conversation this afternoon to press again, as I opened on the African proverb, that when the conversation is ready, the people will gather. And once the people have gathered, the conversation will be ready to begin. This is a conversation that is happening off of the back of 2020, which was a historic year for green and labeled bonds issuances. Green bonds in themselves peaked at over $1 trillion in global issuances, while closer to home, we closed the year just shy on $4 billion, and the year has opened already in the first quarter with more issuances in green and sustainability bonds than is comparable in the years gone by. So definitely the market is saying the time is now. This is a conversation that there is significant appetite to have from project developers, such as SECAT and many others that are on this call, and we appreciate your joining, who are gaining momentum in the conversations and connecting capital with the climate agenda. And this is a very important conversation for financiers such as Ruan and Bank Windhoek on the financing side of the table to come together in conversations such as this and really begin to create a common language for how we identify projects that are going to catalyze low carbon futures that are inclusive and really leverage the story that Africa wants to tell coming out of the coronavirus pandemic. And perhaps for those joining further afield, I can just give a little bit of context for that. Not only is this a very important year globally from a climate and climate finance conversation perspective ahead of COP26, there's a different note that this year is beginning with, in that this year is also the first year that we are actively working together to make real the Africa Continental Free Trade opportunity. And that brings with that an accelerating force and an opening up of conversations. Our panelists today, Angelique, will dig deep into the blue economy agenda that the island states are at the vanguard of, protecting our ocean spaces, what that means for sustainable economies. And at the same time, from the Western hemisphere of the continent, I'm really excited for Ruan to dig into a bit of how Namibia, also a very unique biozone globally, is galvanizing an ecosystem of investors to protect and create climate resilient futures. I think I won't spend more time than that opening up this conversation, but I do want to, as I hand over to Olumide and say that I really appreciate his being here in the panel today, because the Climate Bonds Initiative has really been behind a lot of the work that has coalesced the Africa green and sustainable bond ecosystem as we see it today. Olumide himself, as he tells you, and we do intros in this conversation, has flown backwards and forwards across this continent. And as an organization, Igugu Global, we were very proud to be part of the work completed by Olumide and the Climate Bonds Initiative that has brought us to this moment where the continent does have a sustainable, a green bond issuance framework that is applicable across geographies. So this is a conversation not about how Africa is starting to do green bonds, but how we really leverage the groundwork that has been built in the policy space and the work that forward-thinking issuers such as SACAT, such as Windhoek, Bank Windhoek, are moving forward with and really coalescing investor ecosystems around, and what best practice can be shared, not just across big issuers, but small issuers. And I think for that reason, these are transactions and a conversation of strategic importance. And I want to thank you again, all of you, for joining and begin our introductions. Olumide, perhaps I can call on you, sir, to give us an intro, a little bit of a background in terms of the work that you're doing with the Climate Bonds Initiative this year, and just what this moment means for us in terms of the global policy context and the amount of green and sustainable issued bonds that have brought us to Q1 2021, where the market is saying that we're at a historic first quarter high.
Thank you very much, Nelly. I think I'll probably start by introducing Climate Bonds itself, which is a UK-based international non-for-profit sustainable organization whose objective is literally pushing for the coalition of a $1 trillion private funding towards resolving climate issues and bringing about climate solutions and climate actions. We've been around for just over 10 years. And in that time, we've literally transited the entire world, if you will. We've got colleagues across all geopolitical jurisdictions, all the way from Australia straight through across the globe, through China, through Oceanic, India, the Middle East, into Africa, where we speak today, and across Europe, into the United States, and then Latin America. And we've basically helped and worked with governments, ministries, as well as the private sector's banks, to bring about a clear understanding of what green finance is about. We've specifically stayed initially in the debt market because debt is easily understood. So by building, and by the way, whilst the Green Bonds, the ICMA, which obviously put together the Green Bonds principles, which is a set of guidelines for indicating what green looks like. And many verifiers have actually made second party opinions on what, and given opinions on what green assets should look like. Climate Bonds is the only one that has worked with the industry as well as the investment community and the climate scientists to drive a scientifically driven set of criteria, which focuses on basically aiming at the Paris agenda of keeping the global rise in temperature at about 1.5 and settling below 2 degrees. And so when we say a project has been certified, you can certainly know that it's in line with the Paris agenda and also encompasses the guidelines of the Green Bonds principles. So, obviously the market, I like to point, rather than historical all the way back to 2007 when the first initial bond was issued, I want to focus more on the last 5 years, as it were, because that's where we've seen a lot of trajectory. And for those who are joining, who are trying to figure out what exactly is a green bond, basically relative to other types of bond. So if you think about the fact that a bond, be it green, is issued and structured the same way as any other bond. So we're talking about vanilla bond or traditional bond. The difference basically is actually in what you use the proceeds for. That's what basically gives it that label. Now, you don't issue a green bond, you label a bond green, or you label it sustainable bond or sustainability bond or linked bond based on the use of those proceeds. And I think it's very important to make that distinction. And the reason why I make that distinction is that it is possible to issue a bond and literally find out much later after the event that it is, the use of proceeds are technically in part or in whole green, and you can label it afterwards by doing a post-issuance labeling. Yeah. The benefits of that are immense, because what it does is enables you to tap into a set of investor community, which ab initio you will never have had access to. Plus, also it gives credibility to the issue. And I'm sure Ruan and Angelica will speak to that much later as to the benefits they've gotten from, one, being an issue of green bonds, but more importantly, going through the rigorous process that are attributes of, or core components, if you will, of the green bonds principles. Now, speaking to the market and where it is today, the market has clearly grown phenomenally since 2016, when China issued a total of $40 billion in green bonds. And typically the market has grown gradually, scaling past the hundreds of dollars, billions in issuance, all the way to even last year, which there was a bit of a stall in the market come March when we had the pandemic. But even then we had, surprisingly, the records were broken with the level of issuance that were done, up on about 250 billion last year. And we're now projecting close on 400 billion this year for green bonds alone. By the time you had the cumulative figure, the market currently stands at over 1.2 trillion. Last year, we broke the $1 trillion mark, and today it stands at 1.2 trillion. If you now add all the labels to it, including sustainability, blue bonds, pandemic bonds, and all that stuff, you're looking at near enough over 1.7 trillion. So what am I saying is that the market is taking, it's no longer a niche market. This market is here. Sustainability, investment is something people are beginning to understand. And by creating standards, and criteria, it's given investors, right, the confidence to know what is green and what it is they're investing in and how that impacts on their own internal mandates. And finally, if I may, I think where we see today is that in terms of the work that I have actually personally done, or CBI has done in Africa, we've worked with the two colleagues of mine who are on the panel here, but we've also worked with countries like Kenya, Nigeria, Ghana, and Zambia, Zimbabwe, South Africa, to put in place and working with the regulators as well as the ministry, put in place the framework and infrastructure which we can now leverage to scale up the green bonds market and green investment, not necessarily for mitigation type projects, but also for adaptation and resilient projects, which is more of what is needed in Africa.
Thank you. Thank you for opening that up for us, Olumide, and giving us a little bit of a background to the Climate Bonds Initiative. I appreciate your being able to take us right back to the beginning. And this brings us exactly to the key point that you referenced. What differentiates a regular bond from a green bond or a labeled bond is the use of proceeds. And on this call, we have two very distinct and unique transactions labeled differently. Cumulatively, this is a market that is accelerating. But on this call, Angelique is the leader of SACAT, who is very much the driving force behind the world's very first blue bond, the world's first debt for nature swap as well, which is a model that the president of Namibia has outlined in the Harambee Recovery Plan, the Green and Blue Plan for Namibia. So Angelique, I want to hand over to you and please introduce yourself, your organization, and your journey to the capital markets as an issuer trying to drive systemic change in our oceans.
Thank you very much. Greetings, everyone, from sunny Seychelles. So yes, as introduced, I'm Angelique Pouponneau, and I'm the CEO of the Seychelles Conservation and Climate Adaptation Trust. From now on, I'll be referring to it as SACAT. Now, SACAT has always been a partner when it comes to these innovative financing deals, and both of them that we're most well known for is the blended finance deals are public and private partnerships, essentially. Now, the Debt for Nature swap was the very first one that we got engaged with and which we were able to facilitate. But the Debt for Nature swap, of course, was done in partnership with the government of Seychelles and the Nature Conservancy, where we were able to have a debt restructure for the country at a time when we very much needed it after the 2008 financial crisis. And there, in addition to the debt restructure on more favorable terms to the terms that we had with our existing external creditors at the Paris Club, was also a commitment, a policy commitment to protect 30% of our exclusive economic zone. Now, that at the moment, I think our levels of protection are something like 410,000 kilometers square of ocean. That we are...
Just for context, Angelique is an islander and makes light of this. The Seychelles is an archipelago of 115 islands that are home to some species that only exist there, and is one of the largest marine protected spaces in the world as is. So they are right at the vanguard of the work we're talking about today. But yes, Angelique.
No, exactly. So, and of course, this requires significant investment, right? It's a big commitment. It still requires support. We now have done designation. We're now beginning our journey on implementation. But the good thing is that we already have these financing mechanisms that are there to support it. But we've also seen one of the key messages that we always emphasize is show political will and the partners will come. And we've seen a lot of that happen most recently when we announced the designation of the 30%. We've seen, I'd say, about 5 partners come and indicate that they're interested to assist through developing new financing mechanisms. The other financing deal that, again, here we're a partner. The sovereign blue bond was issued by the government of Seychelles. It was a $15 million bond, which had investors from Nuveen Calvert Impact Capital and Prudential. But what was very interesting about the deal, again, going to this PPP, public-private partnership, was the World Bank provided us with a partial guarantee, as well as the JEF came in to support us with a concessionary loan to support repayments. Now, with the blue bond, again, it's very interesting about the question of label. But what was interesting for us is that the creditors and the World Bank were all very clear as to what the proceeds should be used for. And this was to transition Seychelles to sustainable fisheries. And as managers of the bond, and we manage the grant component, so we think we're mostly impact investment, while the Development Bank of Seychelles manages the loan component. So we are there to make sure that we're investing the proceeds, sort of likely the proceeds to the right activities. And I'm happy to share as we go the types of projects that we've supported so far. And it's so happy to share that. But those are the 2 financing deals that we have been looking at that has been serving as a model for other countries to explore. But always very mindful that this is something that we've worked on in a small island developing state. And as such, thinking about how to scale that up for larger countries is something that's very relevant, but we're always happy to share.
Absolutely. I think I couldn't have said it better than when you said how key the political will is and how that is just a first mover. And really, that's kind of the part of the key element of this conversation to date, right? Since Seychelles took that step in being the key leader, we've seen in South Africa some significant foreign investment for the Africa Ocean Hub that's opened in Cape Town. The work that you've been able to demonstrate has really caught on in terms of kelp forest experiments that we're beginning to see on the west coast of Africa. But certainly not only in the African context alone, in the Caribbean, very much this conversation. There's a lot of mutual learning and transparency that SIDS are bringing to the conversation around water and the carbon story. But I suppose just picking up exactly on that to pass the baton to another very unique transaction on this phone call and person, Ruan, and not just transaction. Ruan is from a very special part of South Africa, the Ceres Valley, which I think creates the world's most, home to the world's most delicious fruit. But he's since left us and now lives, or left South Africa rather, and now lives in Namibia, and was instrumental in another unique transaction, the Bank Windhoek's first green bond, the first of Namibia as a whole. The use of proceeds of that were for an energy transaction. But tell us a bit about that, what and the political will in the Namibian landscape, Ruan. I think I'd just like to open the floor to you, get a little bit of all of the unique characteristics that came together in making the Namibian green bond issuance a reality. And ahead of its maturity at the end of this year, we're very excited to learn during the course of this call what your ambitions are in terms of label bonds and issuances going forward. So over to you, please.
Thank you very much for that introduction and setting the scene. So I'm very eager to share our story. So it also, as you know, Namibia is in a very favorable position to have abundant resources of sunlight, wind energy capacity, and also encroacher bush, invader bush biomass opportunity. So we're in a perfect position for sustainable development, and also the transition to a low carbon and climate resilient economy is evident in our country. So we all know that governments' debt ceilings have reached their debt ceilings, and the public-private partnerships are crucial for sustainable development, and also facilitating that transition to a greener economy for future generations. So we as Bank Windhoek, we are the only locally owned commercial bank in Namibia. So it all started with we are partnered with the Sustainable Use of Natural Resources and Energy Fund, established by the French Development Agency back in 2017, which provided us with a favorable credit line, which we used to finance many of the refit solar PV projects in Namibia, where the national power utility NamPower was the off-taker, who signed a power purchase agreement for 25 years on those projects. So that kick-started the whole sustainable finance initiative in the country. And from our learnings during that process, we as a bank started taking up a market leadership position, and we thought, how can we raise our own local funds to finance or facilitate that transition? So this is where we came across green bonds, obviously fairly new to the Southern African region. So we managed to be the first commercial bank in Southern Africa to issue and list a green bond. And you know, the proceeds that we managed to raise, we financed 7 solar projects at that time, because solar in this point of at this stage is we're fairly familiar with those type of projects. But now, as you said, we are reaching the end of our green bond program. So we saw through our green bond management or the green bond program that there's a lot of projects that has environmental and social impact that overlaps. So many social projects has environmental co-benefits, and many green projects has social co-benefits. So this is where we came across sustainability bonds, which gives us the opportunity to finance a broader spectrum of projects, not only focusing on environmental impactful projects like under a green bond. So we also followed the International Capital Markets Association green bond principles, coupled with the sustainability bond guidelines, and we incorporated that, and we are in the process of issuing a bond to raise additional funding, favorable funding, and passing on a type of benefit to the borrowers, because we need to facilitate that as a financier in the local market. We need to facilitate that transition of local businesses taking that leap and investing into renewable energy or sustainable agriculture. So we envision with raising those type of funding in our local market to finance more of societal projects most of the current needs, as mentioned in the Harambee Prosperity Plan and also the Economic Recovery Plan, is the need to address also social issues, education, health, low affordable housing. So that speaks to the societal project. But as he said, there's many challenges associated with issuing green bonds, as we might know. There's a lot of it's a lucrative investment vehicle for many investors, but it's also there's also underlying challenges in terms of additional costs associated with issuing bonds that many of the audience or interested clients can need to be aware of. Is the external reporting. You need to have a credible green bond program. Otherwise, you won't have potential investors into that, because they need to be assured that the proceeds that you manage to raise is going to eligible projects. So first, establishing that eligibility criteria is definitely one of the challenges. And then also, having an impact report to say, what did you do with the funding that you managed to raise? So yeah, that's it.
I think I want to bring in Olumide just right there, right? This is an important point that, of course, the associated compliance requirements that come with the transparency that investors in labeled bonds are after, really. So that, I mean, if we go back to the core principle that the differentiator is that visibility of use of proceeds and being able to account for the impact. So bearing that in mind, perhaps Olumide, how we often treasurers want a cost number. Angelique has spoken to the value in terms of additional investors that you're able to crowd in with this additional with this additional transparency. But this is something that the Climate Bonds Initiative, it's a message that you've rolled all over the continent. I've been there in Nigeria and Kenya as you do it, but not just the continent. It's taken flight in Brazil and Asia. How do we sell to issuers this additional cost of transparency? And then particularly within the context of the point you raised, right? I was intrigued, and I thought it might intrigue some of our audience when you said that there's also the option to go into post-issuance certification. So what does that audit process look like, and how do developers and seekers of funding approach that?
Well, let me start by saying that rather than use the word challenge, I would probably use the word opportunity. And it's interesting that it's interesting that Rowan referenced the challenges. In fact, I one of the things that treasurers will typically ask is, and there's always, and apart from everything else, there's always this focus on pricing. Yeah. First things first, I will suggest that going through that rigor that you go through and having an external verifier to actually assess, if you will, if I use the word assess, your eligibility, but also your internal processes. What it does actually for the issuer is actually strengthens your internal processes. Yeah, even your internal communications and the likes. You find situations whereby organizations actually begin to understand how they're interwoven, internally, more so than they do. Yeah, corporate finance begins to appreciate what sustainability is actually doing, and vice versa, and it comes from the board downwards. So not only does it strengthen the organization in terms of being more appealing to investors, even to the new age employees who are more interested in sustainability, probably more so than the older folks like us. One of the examples I've always given, interestingly, when people talk about pricing, I use Rowan's issuance as an example of one that
benefiting from the green
that actually got a price benefit as a result of being green. It's the only example I use in Africa. So if they've actually gotten such a benefit, then I don't see it as a challenge anymore. I actually see it as an opportunity to reach more into that, to dip more into that community of investors that either they will never have access to. More recently, in fact, just as recent as yesterday, there's a recent green issuance in Nigeria, and the executive director of credit, the finance said that because it was green, we actually were oversubscribed. So the point is, I see opportunities here, and the reason why I say opportunities, because look, let's understand this. As policies change and as regulations come into force, and people are actually required to do more reporting, what you will find is that the cash available, and look, let's not kid ourselves. If you look at the size of the green bonds market or the labeled market relative to the debt market, it's still very wide. But the truth is, the trajectory in which we are moving for the targets that the world has set itself, 2030, 2040, what you will find is that there will be less money being channeled towards carbon intensive projects. Right now, you're not going to get any money for new projects that are coal related. It's impossible. So we have situations in South Africa, for instance, whereby, there is a very big risk of stranded assets, for, carbon intensive economies. Nigeria being one of them, South Africa mentioned with coal. So we have to actually gradually move away from that, As in the same breath, you're going to have more money being channeled towards green assets. What I will say is this, two things. One, it's a lot easier for you to invest in more sustainable projects because obviously you get more investment for it. Issuing that cleans up your own books, but more importantly, it's a lot easier for you to refinance in the future. So effectively, being pioneers today and seeing it as a cost, you will see that as a benefit as you go forward, because you will actually strengthen yourself and position yourself for cheaper financing in the future, where others will be in your position today. But then let's face it, if you're going to get something good, there's a cost that comes with it.
I'm definitely inclined to agree. As Igugu Global, being a green finance analytics room, we tend to see transparency as destiny. We definitely believe that we're moving towards a time where, like any other transfer price, investors will demand this. But I'm interested to draw you back into our conversation, Angelique, again, from a very important part of the value chain and making all of this happen, right? The project execution. And speaking to the policy space, can you comment on just the transparency and the level of partnership that you've been able to build with the Development Bank of Seychelles and your other ecosystem players in making this happen? Because very much Ruan sits perhaps in a treasury dealing room and is looking for more issuers potentially on this call and beyond to begin these sorts of financing conversations where there can be transparency of use of proceeds, and somewhere in there, perhaps a greenium for Ruan and a reduced cost of funding as we see increasing investor demand for these assets.
Anyway, I'll take it closer to the ground if you like. I like this conversation about transparency, and SECAT always says that we're transparency in law, because our act that creates us actually embeds transparency within it. But at the same time, transparency costs, right? And what's interesting is, oftentimes when you're working with financiers and investors, their interest, and quite understandably, nothing too surprising, their interest is, they want to know how many endangered species have now, with the efforts that we've done, come back, right? That's the success story that they want to tell, that they invested in the Seychelles and a stock was on the brink of collapse and efforts were made using their proceeds and it's back. Now, the sort of unsung heroes of making all of this happen is the administrator and the manager of these funds on the ground, right? But oftentimes, the cost associated to make sure that you have the best reports, and for you to make sure that you have impact assessments and impact measurements are just not factored into the costs, right? So you're here on the ground, and SACAT has learned the hard way, and we've sort of, and we know the value of it, right? Because it does attract more financing. The only thing is you need the capacity and you need to cover the cost to do it. And that's posed a challenge. I mean, most recently, what SACAT has invested in is we now have a results-based framework for our organization and all the proceeds that we disperse. And this is very much at its infancy, like what can an organization with the capacity of SACAT actually be able to measure and then being able to report back. But the importance of it, of course, by the way, all this very important, all of this very rarely taken into consideration when designing these deals. It's sort of like, okay, 10% cover someone's salary, and then, okay, we're happy, we'll get some reports. But so we've done this piece of the puzzle, but at the same time, there's no replacement for it. We are doing it because we know it's impactful. We know this is how you get to the second phase. Drawing more players into the ecosystem of supporting the development of the blue economy and the health of the ocean. It's been really nice, though, saying that, I have to say, I have to be fair, that there are some donors now that listen to this narrative and take into consideration that you need a strong administrator in order for you to deliver on impact. And you need someone who understands the wide realm of things that we're working with, and the local communities, because this isn't just about saving the fish. I don't think it was ever about saving the fish. This is about people and the planet, and how all of this works together. So that would be
all of us.
Yes, exactly. That would certainly be my point when we're talking about transparency. It has to be there. It's attractive, but it comes at a cost. And I think it needs to be factored more into these discussions when we're talking about these issues, and what are we willing to put forward to make sure that transparency is delivered as well.
If I can interject very quickly,
please do,
because I like where you.
This is a dialogue of friends.
I mean, I actually like
as
where
well.
you landed.
Please join us.
Initially, I mentioned opportunity, and I like the way you've actually brought us back to costs. So with costs, I like to associate with the risks. Yeah. What is the risk of things going wrong because you've invested in the wrong things? Now, if things blow up, the cost of actually cleaning up, right, it's much more expensive invariably than what you're investing today. And you and I know that, look, we're human beings, right? We will typically take the easy way out. So unless we're forced to do stuff or forced to look at things critically and begin to put scenario analysis into play in terms of what are the potential risks, which translates to costs of not doing it today, it's going to be more expensive later. Example, for instance, yeah? If I have a set of real estate and I speak to an ocean, a country like yours, if I've got a real estate in a coastal city, right? Loads of expensive real estate. And, rich people like to live around the coast. Yeah. So the expenses are likely to be very expensive. Now, what's the cost of putting a flood defense in today, right? As opposed to the potential of being flooded when the river level, when the water levels rises and it takes out all of that real estate. Not just to the bankers who've lent the money on a mortgage, but also the insurers, who've actually covered that cost, plus the social fallout of all of that displacement that invariably you will find the government has to cover, because for most of us in Africa, we're actually underinsured, to be real. So when you think about all of that and you bring it forward, you'll find out the forward cost of actually doing all of this stuff and actually being transparent and driving us towards a more, what's the word I'm looking for? Internally structured and building internal capacity over time. We're actually better off today than we will be in the future. And speaking to the banks, for instance, it sits on your books because all of a sudden, what is currently an asset could easily be a non-performing loan tomorrow and become a liability on your books. So even the financial the climate related financial risk that we're looking at in the future, apart from the physical, just the physical itself is quite enormous, let alone when you start looking at other parts of the economy.
Yeah, I think perfectly picked up there, Olumide. And I think just to crack this conversation open a little bit more, Angelique, you talk about cost, the cost of transparency, the cost of adaptation as we currently understand it now, and then the risk of what it could be. And these are all, again, housed within today's conversation of policy and adaptation, because broadly speaking, we're already seeing the coalescing of what we call, what has been called the inevitable policy response. Olumide has signaled, referenced already the movements around carbon markets. In South Africa, the carbon tax is one of that. This is one of the inevitable policy responses that is bound to impact financial markets as coal phase-outs begin. And it's one of 8 levers that, for reference, I'll just quickly shoot through here, but Ruan and Angelique have already spoke to. So policy action around carbon pricing, coal phase-out, clean power, the net zero movement that everybody's starting to make reference to, coalescing, particularly in transport, low carbon buildings, which in emerging markets have been identified as a $24 trillion opportunity. Clean industry, which very much again speaks to our opening themes around the Africa Free Trade Agreement and the opportunity that creating local manufacturing processing that is clean and sustainable, that creates. The carbon story is very much linked with the oceans. And as I close with carbon and forestry, I want to hand back over to Angelique again in saying the carbon story is very much linked with the oceans. Ocean sinks have the capacity to absorb 5 times more carbon than land sinks. But again, these are conversations that are at their vanguard. Angelique, I'd like to invite you to speak a little bit about the experiments that are currently taking place in the Seychelles. There's definitely a new report that has just come out between yourselves and the James Michel Foundation around the opportunity that presents. And yeah, I just definitely want to dig into some of those successes, particularly if you have any in the monitoring and evaluation space that we might be able to share with our friends in the Western Hemisphere of the continent. And Ruan, perhaps on the back of that, pick up on the projects that we're seeing in Namibia. But Angelique, please, over to you.
Sure. The Seychelles within the UNFCCC has committed since 2016 to have a blue NDC. So obviously this was a series of meetings and groups of countries that wanted to see a greater reflection of ocean within the climate space. Mm-hmm. Now, as of 2020, SEICAT and other partners has been supporting the government of Seychelles with integrating blue carbon in the nationally determined contributions. Now, in order to do this, we have to undertake a baseline. So Seychelles does not actually have a validated map of seagrass, of all the seagrass meadows that it currently has. We didn't go for mangroves. We are doing the assessments, but we didn't go focusing on that just because Seychelles doesn't actually have mangroves to scale in comparison to Costa Rica or Belize.
A granitic island.
Exactly. So we don't have that much mangroves, although Aldabra, one of our most southern islands, is doing quite well there. But we do have a lot of seagrass. And seagrass has been seen as one of the most effective ecosystems when it comes to absorption of carbon. So what we will be doing is mapping the entire exclusive economic zone of all the seagrass meadows that are there, as well as doing carbon stock assessments. So also in the soil, to identify how much carbon is being stored. There has now been more interest, again, partners coming as the political will shows. Yeah. There now has been interest to explore, but this is very new, but to explore deep carbon. So the work that we're doing now is very much, 1 meter. Yeah. So they're looking at further down as well. That's come to the light. But once we've done this, the government of Seychelles has already made certain commitments. And at the moment, the commitments are to protect, through our marine spatial planning process, of course, to protect at least 50% of coastal wetlands by 2025 and 100% by 2030. Subject to external funding being made available. That tagline is there, and that is a signal to the international community that we will require support if we're able to deliver on this. SEICAT has been working with the James Michel Foundation to develop a roadmap to understand if there are blue carbon opportunities there. We are also working with some carbon market firms to explore whether we can come up with a financing mechanism around this. I'm very intrigued by the climate bond, but we are exploring at carbon credits and how that would work for seagrass, because it's quite developed for mangroves. So that's really where we are on sort of the blue carbon front. The NDC should be validated in the next couple of weeks, and all of this will become sort of officially online. But that is what we are doing, and we are continuing to push as well that the ocean is recognized and given more attention at COP26.
Fantastic. I think, again, echoing that, as the political will arrives, as the people gather for the conversation starts. Ruan Bank-Windhoek was a first mover in Namibia on this front. Your use of proceeds were for energy, and just this afternoon we've heard news from Namibia again of a €100 million investment, an MOI to have Namibia join one of only 3 countries on the continent at the moment that is part of the Gigawatt Club prospectively. Can you speak, I know that your green bond issuance is maturing towards the end of this year. Can you please share a bit with our panel and the audience today, your intentions on the back of that? I think today's conversation has been fantastic, as we've really gone backwards and forwards with what is the use of proceeds, and then what do you label it, and what is the cost of that? You've got one green bond under the belt. You see an opportunity to do more in the Namibian environment. Over to you. Where do you go from here, Ruan?
Okay, so I wanted to start to say also that, a lot of the opportunities are created by the support of our government as well. So Namibia, interesting fact that Namibia is became the first African country in Africa to incorporate environmental protection into our constitution. So you can clearly see there's a commitment from the government side. They also establish the Namibian Investment Promotion and Development Board, a dedicated project management office. We've got an environmental investment fund. So there's a lot of initiatives that the government put in place to attract development of green projects in Namibia, and also to lure in foreign direct investment, because we, as local financiers, we can't participate in all the debt funding. We need some private equity investment as well. So from that side, obviously green projects is the first go-to type of safe haven, if you can call it like that. But the thing is, we can see there's a lot of opportunity in sustainable agriculture, sustainable tourism. As you know, our economy is relying a lot on tourism. And there's a huge impact from the pandemic on the tourism sector as well. So we'll clearly see there's a lot of pressure on local industries and companies to reduce their overheads. So you can see that the solar or renewable energy projects will still be there, but we see a lot of potential of wind power in our southern western part of Namibia, in Lüderitz area. There's a lot of development in there, as well as blue kelp farming, extensive project that is planned in Lüderitz area as well. And then green hydrogen, there's been made some noise there. So you can clearly see there's a lot of opportunities that's being created in Namibia, and I think we're in a perfect position to join forces with the government and, lure in potential investors to facilitate that transition and make those type of projects reality. I mean, there's also opportunity to sell excess power to the South African power pool as well. We want to reduce our reliance of importing electricity and also be a net exporter. I mean, the government made a commitment to say by 2030, all the electricity that's being consumed within the borders of Namibia, 70% of that needs to be generated by renewable energy source. So you can clearly see that there is a lot of support from our government and also the private sector.
Thank you. I'm checking the Q&A and getting a conversation. Have a question coming through here. I think Angelique's been quite transparent and shared a bit about the controls they've put in place and within SACAT. You've referenced the cost, Ruan, but are you in a position to share a bit about sort of the governance systems that you've had to put in place since your green bond issuance and as you look to do more of this? I think that question I'll pair with another to Olumide to say, again, real opportunity that we're cracking open here that as Angelique has shared, it's not just about the fish. It's about saving all of us. And it wasn't just about the green energy bond. It's about the community as a whole. How do banks begin to look at their balance sheets with this lens and allocate capital on that basis? How do they start the journey? But starting with you, Ruan, on the cost of the transformation and the systems you've put in place.
Okay, so yeah, obviously we were the first guinea pigs of issuing a green bond, so it was a learning curve for everyone. So we joined forces with the International Finance Corporation to establish an eligibility criteria that we can use, which reduced a lot of cost for development of eligibility criteria. But now, obviously, it depends on the type of investor. The investors, if they require the bond to be listed, there's some listing fees as well that you need to incorporate there as well. And then obviously the impact report, you need an external auditor that needs to audit each and every project that you manage to finance with the proceeds that you raised. That is also additional cost depending on the size of the project and the admin behind it. And then, there's a lot of awareness creation as well, a cost in awareness creation, because we as a financier need to create awareness in the local market of the benefits behind issuing a green bond. So we need to educate our clients to say, listen, this is a favorable funding mechanism that we use to pass on an interest rate or some sort of benefit to the borrower, because if we are not able to pass on a benefit to the borrower, it defeats the purpose of raising favorable funding. We are not there to increase our margins. We want to pass on a benefit. And by doing that, we incentivize our businesses and clients to invest in green projects. So yeah, that's the additional cost that we say. Obviously it's an opportunity, as Olumide said, but we still need to factor it in, because as a bank we take 100% of the risk of all the projects which we finance. So the investors on those, they are not directly linked to the performance of the return on investment. We as a bank, take the risk on all the projects that we finance.
Olumide, I'd like to hold space for you to jump in on that one. I definitely...
It's a number of things that have actually been said.
Yeah.
And I can spend all day responding to this. I mean, obviously, I liked what Angelina said in terms of policies, and Ruan speaks about the financing and the fact that they carry the risk. But, look, I think Angelina and Ruan mentioned something earlier on in the game, which is capacity building, right?
Yeah.
Both capacity internally as well as capacity in the market. And I guess, folks, that's why you need someone like myself. Yeah. That's why I go around you need to bring me in to help you develop that market, if you will. Yeah. So the more, I've spoken at investor conferences and things like that. So the more you bring me in to speak to your investors and they understand what it is you're trying to do, the easier it is for you to sell what it is you're trying to sell. So I've just sold myself, right? But but let's be real, right? It's not just about the fish, even though the fish is important, because guess what? Contaminated fish will affect our health. So invariably still comes back to us. So even just going down to the basis of the fish itself and the quality of the ocean, yeah, and our food sources. So food security, agriculture you mentioned, yeah, that's also important. In terms of reporting, for instance, yeah, yes, when you do it for the first time, it's very difficult, like anything else. However, one of the things that we need to start looking at is actually passing that level of knowledge onto our clients so that they begin to gather the data for us as they implement their project. And once you build that into your internal criteria as a bank, the information that you're looking for reporting becomes a lot easier to gather. So it's not just dependent on you after the event to go and look for it, because your clients already know the type of information that they require of them. Then they provide that information to you upfront, number one, and as they implement their project, making it easier for you to report. Look, you asked a question in terms of what can the banks do more of to allocate their resources. Well, what you don't know, you can't solve. What you don't know, it's often said, well, you can't measure, you can't resolve. Yeah. So one of the things we need to look at, and one of the things that we do, and yet again, you need to bring me over. I love to visit Namibia, by the way. And also you tell me which island to go to in the Seychelles. But more importantly, we look at banks, we work with banks to actually help them tag their current assets. Yeah. So you begin to understand which of this is green that you can do more of, which of it is not so green that you need to actually start putting a strategy in place to replace. And what you then do is once you begin to have an appreciation of your exposure, your current exposure to as is, to green as well as not so green projects, then you can put in play a strategy to actually shift over time more of your assets to more of the green assets. And you begin, because your people are now more knowledgeable, if you will, of what is green, they begin to look out for more of those projects as they ingrained in your loan origination framework. Look, we can talk more and more about this, but look, there's a pathway for all of this. Yes, it's new to us, but the truth is we're getting there very quickly. And the more capacity and more knowledge that we have, that is in terms of people and knowledge base. And another thing is, we begin to talk to each other, a bit of like this. We begin to learn from each other's experiences, each other's challenges. What is a solution elsewhere can be brought to bear on a challenge somewhere else. We will make it together. I will close by going back to the so-called African saying. He said, if you want to go fast, you go alone. If you want to go far, you go as a group. So the more we learn from each other, the more we become more capable, and the more it is we're able to deliver for the people of Africa.
Yeah, thank you very much. I think we've just hit two on the head. I'd like to close with closing thoughts, Angelique and Ruan, from yourselves as well, particularly on growing the partnership ecosystems within both of your environments and what you look forward to in the coming 12 to 18 months horizon. Mm-hmm. Ruan or Angelique?
Oh, sorry. Yeah, so we want to, obviously issue another sustainability bond. So hopefully we can do that by early next month. And also we want to assist our government also to create a capacity to issue their own bonds in as well. Green bonds, blue bonds, as mentioned, there's a lot of potential there as well. And then also the new label asset class called transition bonds. We've got a lot of mining, brown industries that we need to assist also to transition to greener enterprises. So there's also huge demand for that as well. So I think, in the next year or two, we're going to see a lot of capital raising and, enabling Namibia to partner up with potential investors and project developers.
Angelique?
I think, thank you very much. I'll start with that. Thank you very much for bringing us together. I've certainly learned a lot in the past hour. And I think these are the types of conversations that we need to, dare I say, institutionalize. I feel these conversations are often ad hoc, when someone has a great idea like you had and they sort of bring people together, but how do we continue to work together, learn from each other? And as Olumide said, adopt and adapt to different circumstances. I think We need to look at African solutions that work for Africa, and I think that's certainly very important. And the best way to do that is to remain connected. In terms of what we're looking forward in the next 18 months, definitely filling in the gap about how to create, how to make seagrass meadows and the carbon stocks that they hold eligible for carbon credits.
Yeah.
So that would be the thing that I'm certainly looking forward to see how we create the pathway to get there.
Excellent. I am, as an organization, I shared with Ruan ahead of the call that I lived in the Seychelles, so have felt very close to all things ocean economy since. But as carbon verifiers at Igugu Global, we're also very interested in following the carbon trading story that an opportunity that the oceans are increasingly opening up. As an organization, we look forward to the progress that the Seychelles will make there in the coming weeks. We celebrate the transparency you've made in the shipping space with recent reports. We look forward as well, just in the overarching region. Mauritius has just come out with a sustainable bond issuance framework. Olimide, we've worked together in Nigeria, but the work that you started and the work that since the Green Bond Toolkit framework has opened an opportunity to expand it to Zambia and the work of the FSD to countries that aren't currently having the climate conversation across the continent, to Mozambique, where critical transactions are happening and climate futures are very vulnerable as well. So we look forward to more conversations like this, building the institutional knowledge and being there to map the state of decarbonization across the continent and keep us all growing. Thank you very much to everybody that's been able to join us for the full hour. Many thanks. This is the first conversation of Africa's sustainable transitions. We tapped a bit on the green bond market, but this was just a reference to a whole lot of ecosystem policy conversations that are happening from the ground up, where Angelique is fighting to make sure investors have some transparency on use of proceeds, right to the top where Ruan and the Bank Windhoek community look on the horizon and they see an opportunity to do more than what has already been done within the green bond labels and likely go to market again at the end of this month. That's very exciting news. All the best with that, and many thanks to everybody that was able to join us this afternoon.
Thank you very much, and have a wonderful day.
Thank you very much for the opportunity.
Bye.
Thank you.